you didn't expect to be dealing with this right now. In this video, I'll walk you through what to do in the first 30 days. The first week is about one thing: protection, not decisions. Keep things stable. That's it. Most financial mistakes happen right now, not because people are careless, but because they're overwhelmed. You may get calls, advice, pressure to act. You don't need to. Almost nothing has to be decided in the first 7 days, and anything that feels urgent usually isn't. Protect first, decide later. Let's go step by step. Make sure you have access to cash. You need to know you can cover basic expenses for the next month or two. Look at accounts in your name, and ask the bank how any joint accounts are titled and handled after death. If an account is only in your spouse's name, it may be restricted for now. Don't try to pull money out of those without guidance. It can create problems. What you're checking is simple. Do I have enough accessible cash for the next 30 to 60 days? If yes, you're fine for now. If not, call the bank. Tell them what happened. Most have bereavement teams that can help. While you're reviewing your accounts, check the credit cards you carry. Specifically, find out whether you are a co-applicant or an authorized user on each card. Here's why this matters right now. If your spouse was the primary cardholder and you were only added as an authorized user, that card is technically no longer valid after their death. The account belonged to them, not you. This catches people completely off guard. You could walk into a grocery store next week, swipe a card you've carried for years, and have it declined, because legally that card belonged to your spouse. Call the card issuer for each card you carry. Ask whether you are a co-applicant or an authorized user. If you're only an authorized user, ask what your options are for transitioning to your own account. It's a 10-minute call that can prevent a genuinely awful moment at the worst possible time. Get death certificates. More copies than you think. This is the most underestimated step. You'll need certified copies for almost everything: banks, insurance, Social Security, investments, property. Many families end up needing around 10, and complex estates may need more. The funeral home can usually handle this for you. Put them all in one place. You're going to use them over and over. Running out halfway through this process is very common, and it slows everything down. Notify the right people in the right order. Here's the order that works best. First few days: Social Security, employer or pension provider, life insurance companies. Then, within a week or two, banks and financial institutions, an estate or probate attorney. One quick thing to understand: not everything goes through probate. Accounts with beneficiaries, like IRAs, 401ks, life insurance, usually pass directly to you. One more thing in this step that most people miss completely. Contact the 3 major credit bureaus, Equifax, Experian, and TransUnion, and report your spouse's death. Ask them to place a deceased indicator on the file. This protects against something called deceased identity theft, and it happens more than most people realize. Fraudsters scan death notices and obituaries, then attempt to open new credit accounts in the name of someone who just died. It's quiet, it's common, and it's completely preventable with one phone call or online request to each bureau. It takes 10 minutes. Do it in the first 2 weeks. What you are not doing yet: responding to advisors, making investment decisions, reorganizing accounts. That comes later. Leave the investments alone. Just don't touch them yet. 401k, IRA, Brokerage. Leave everything where it is. No moving money. No withdrawals, no changes. One wrong move here can create tax problems that are hard to undo. Here's something most people don't know, and it's actually good news. When you inherit investments from a spouse, you may benefit from what's called a step-up in basis. Without getting into the full details, and this is worth discussing with a CPA, it means the taxable value of those investments is reset to what they were worth on the date of death, not what your spouse originally paid for them. That can dramatically reduce the capital gains taxes you'd owe if and when you eventually sell, but only if the accounts are handled correctly from the start. This is one of the reasons you don't touch these accounts yet. Getting the step-up in basis right requires proper handling during the estate process. Move too fast, and you could accidentally forfeit a significant tax benefit. Your CPA is the right person to walk you through this. It's one of the first conversations worth having. As a surviving spouse, you actually have better options than most. But those decisions should be made later, not now. The money isn't going anywhere. If you truly need cash, talk to a CPA or attorney first. Handle life insurance carefully. If there's a policy, go ahead and file the claim. If you can't find it, check files, email, safe deposit box, or the employer. There's also a policy locator through the National Association of Insurance Commissioners. When the money comes in, don't do anything with it yet. Put it in a safe place like a high-yield savings or money market, and leave it there for at least 30 to 60 days. Yes, it's usually tax-free. The risk isn't taxes. The risk is making a fast decision with a large amount of money when you're not in the right place to decide. You don't need to act fast. You need time. Anyone pushing you to move that money quickly? That's a red flag. Protect yourself from bad advice. This part matters. People in your situation get targeted. It happens more than most people realize. Don't make any big financial decisions for at least 30 days. If and when you need help, look for a fee-only fiduciary advisor. Fee-only means they don't take commissions. Fiduciary means they are obligated to act in your best interest. A good place to start is napfa.org and ask directly, are you a fiduciary at all times? If there's hesitation, move on. Be careful with unsolicited calls, urgency, pressure. Good advice doesn't rush you. Quick recap. Make sure you have cash. Order enough death certificates. Notify the right people. Leave investments alone. Park any insurance money. And take your time before trusting advice. You don't have to solve everything right now. One step at a time is enough. If you want something to print out and work through, the free checklist is linked below. Take care of yourself.